This week I learned uh, and studied about wills and tax law basic. Partnerships are and entities that have elected to be taxed as partnerships fall under the partnership pass-through tax structure. I learned that even though the partnership itself does not pay income taxes, it must file Form uh, 1065 with the IRS. This form is an informational return the IRS reviews to determine whether the partners are reporting their income correctly. I learned while in test to see laws provide a safety net, they don't offer the flexibility or specificity of a will. Writing a will ensures that your wishes are respected, minimizes stress for your loved ones, and avoids potential conflicts. It's a small effort with significant long-term benefits. Without a will, the state decide who gets your assets based on intestacy laws, which may not align with your wishes. For example, if you're unmarried but have a partner, they might not inherit anything. If you have specific possessions you want to give to certain people, those preferences will be ignored. Writing a will is one way to plan how your assets, both personal and businesses, will be distributed at death. Yet, despite the fact that most understand its importance, a majority of Americans, around 70% of adults, have failed to write a will or any kind of estate plan. Wills are not just for the wealthy. A survey of attorneys in East Idaho shows that a simple will cost between $500 and $1,250. If that's too much to swallow, a legal clinic or online provider like LegalZoom will cost around $100. Once the will is prepared, you will print it out and sign it in front of two witnesses and a notary. Many states like Idaho allow you to write your own handwritten will. A handwritten will does not have to be notarized, but it must be handwritten, not typed or printed and signed. Having a will becomes more important as your net worth increases, but becomes absolutely necessary once you have children. Should you and your spouse die at the same time, a court will decide who will raise your children if you fail to create a will with a guardianship provision. Taxpayers can claim a standard deduction when filing their tax returns, thereby reducing their taxable income and the taxes they owe. In addition to the regular standard deduction, taxpayers can claim an additional deduction if they or their spouse are 65 or older or blind. The standard deduction amount for tax year 2023 filed in 2024 is $27,700 for a married couple filing jointly, $13,850 for single or married filing separately filers, and $20,800 for heads of household. The additional deduction for single filers or heads of household who are either age 65 or over or blind is $1,550. Along with the standard deduction, personal exemption provides that only income above a basic level is subject to tax, helping ensure that the poorest households are not subject to the income tax. Tax credits are subtracted directly from a person's tax liability. They therefore reduce taxes dollar for dollar. Credits have the same value for everyone who can claim their full value. Shareholders in a corporation are subject to double taxation. The corporation pays taxes on profits, and the shareholders pay taxes on dividends that are distributed to owners. It is important to remember that businesses are not taxed on revenue, but on profit. As such, businesses must track all business expenses, also known as deductions, so as to pay tax only on their profits. This is the profit, summary I learned this week. Thank you very much.